Welcome back. Good Monday morning, everybody. Thanks so much for joining us. I'm Maria Bartiromo, and it is Monday, October 9th. Happy Columbus Day. Your top stories right now, 7:30 a.m. on the East Coast. Nate churning its way north, dumping heavy rain across the East Coast this morning. The storm made landfall on the Gulf Coast, bringing severe flooding and power outages to thousands. We are seeing the effects in the energy market as well. Some major oil companies starting to put their operations back online. Breaking news overnight, raging wildfires in Napa Valley. Major roadways shut down and neighborhoods have been evacuated. We have the very latest on this developing story. And new fallout this morning from the massive Equifax breach. A new report says that hackers may also be able to access your salary history. Lovely. The details coming up. Another technology giant facing fallout over Russian election meddling. A new report says that Google has uncovered ads purchased on its platforms by Russian operatives. And BlackBerry making a comeback apparently, but without a customer favorite, the keyboard. A look at the company's new flagship phone coming up. Futures indicating another rally at the start of trading this morning. Of course, the third quarter earnings reporting season kicks off this week. We got the markets higher ahead of the earnings period for the third quarter. The banks will report beginning on Thursday. Dow Industrial set to open up about 50 points today. NASDAQ up 14.5. The bond market is closed for Columbus Day. Equities are open. In Europe, the major averages look like this. You do had some pretty good economic data from Germany out this morning. Industrial production, but the FT100 was down. Now it is still down about 0.25%. The CAC Crunch and the DAX index have reversed course. They are now positive this morning. In Asia overnight, markets were mixed. Japan and Korea closed for a holiday. And we kick it off this half hour with this. Hurricane Nate's impact on oil production. The Category 1 storm slammed the Gulf Coast yesterday, unleashing flooding, power outages to parts of the region. It is the first hurricane to make landfall in Mississippi since Katrina back in 2005. Nate weakened to a tropical depression as it moved further inland. Currently, oil is trading this way. Take a look at $49.38 a barrel, below 50 after 93% of oil production in the area was halted yesterday due to the storm, according to the Bureau of Safety and Environmental Enforcement. Oil is up a fraction right now. Joining us right now, the publisher of the Schork Report, Stephen Schork. Stephen, good to see you. Thanks so much for joining us.
It's good to be here.
Your thoughts on the impact of this new storm, Nate, on oil?
It's going to have, and it is having, Maria, a de minimis impact on the oil market. Hurricane Harvey and Hurricane Irma had a much more significant impact as far as infrastructure and the shut-ins are concerned. And regardless of that, the market was well aware of these storms. It shut down promptly and it restarted promptly. So even before we had Hurricane Nate, the futures markets and the term structure of the forward curve was telling us that the market was already coming into balance. Nate was a much smaller storm. It hit in the eastern part of the Gulf of Mexico energy complex. And what we are seeing now is essentially about 93% of crude oil production in the Gulf is shut in. That represents about 17% of U.S. crude oil production.
Right.
But to this point, we saw a 1-week decline in crude oil production in the wake of Harvey. Therefore, Harvey was a much more significant event, so I do not expect to see the same sort of impact on crude oil production to last with regard to this storm.
I say. Steve Forbes.
So what's this going to mean at the gas pump? Anything?
No, Steve, it should not have any sort of lasting impact. We are not seeing any sort of disruption to the transportation. Let's keep in mind crude oil is valueless. It all depends on how you refine it. And with regard to Harvey, what we saw was the knockout of the refineries, and that certainly had a significant, but let's say a short-lived impact on gasoline prices. At this point, last week, towards the end of the week, we saw a significant sell-off in crude oil prices. This was likely in anticipation that Nate could possibly shut in even more refineries in the Gulf of Mexico. But this is October. This is the weakest demand month for crude oil as the industry goes into its maintenance season. So we are buying significantly fewer barrels today, the refineries that is, than they were just a couple of months ago. So this should not have any significant lasting impact on gasoline price for the consumer.
Stephen, it's Dagan McDowell. We, the United States now, and you can correct me if I'm wrong, are the #1 exporter of refined product in the world. What kind of power does that give us over, quite frankly, nations that hate us, whether it's Russia or Iran, given the ramp up in our own crude oil production in this country and the ability to refine product and export it? Because, again, that seems to be the string that ties all the nations together that hate us and even gives us leverage over North Korea, for example.
No, it has a significant leverage, Dagan, and this is what is a positive of the current political environment, and I do appreciate that there are plenty of negatives to take away. But the problem that we had over the last 8 years is in our industry, the oil and gas industry, capital was not welcomed and it was not well treated, as the saying goes. Clearly, the flag has been turned and capital and investment is welcomed into this market. So it certainly is a boom for the economies, the oil-producing economies, be it here in my home state of Pennsylvania, through the Appalachian Basin, all the way down to the Gulf of Mexico, and of course the Upper Plains. So it does give leverage, but more importantly, it is the quote-unquote the oil that drives the economic machine of this country. So anything that is good for the energy industry is good for the United States economy.
With oil at $50 a barrel, Stephen, does that mean that companies are still going to do a lot of capital investment, or are they just going to take a wait-see approach now?
They are taking, Steve, they are taking a wait-and-see approach, $50 a barrel. Some producers have been very proactive and have gotten down their costs. Other producers are significantly strained right now. So you are seeing, and this does lay the groundwork for a rise in oil prices, but let's keep in mind a moderate rise in oil prices. What we've been seeing now going on 3 years, yes.
And we know this administration likes energy. Has there been an impact yet, overt impact in terms of leasing and government lands and offshore and that kind of thing? Is that starting to happen?
Yeah, absolutely. So what we've seen now with this administration has been a relaxation of a lot of the hurdles that were put forth with regard to leasing from the previous administration. So the paperwork or the red tape, as it were, has been reduced. So and what we are seeing now is essentially oil, when we get into that $55 to $60 range, being in the spot market out through the forward curve, we see the upstream, the guys pulling the barrels out of the ground, doing significant amount of hedging. So right there, Steve, that tells me where the ceiling to the market is. And conversely, where oil prices are today, sub $50 down to the mid $40, is where we start to see the refiners do significant amount of hedging, and that is indeed playing out. So the industry is telling us, both whether it's the guy taking the barrel out of the ground or the guy boiling that barrel into gasoline, they're telling us the market is essentially range bound in between the mid to high 40s, the mid to high 50s.
So there are people who are saying that the price at the pump has gone up since the storms, and they're looking at $3 prices, $2.75. They're looking at more. Is this going to have an impact on the auto market, on consumer confidence that we often see as prices do go up?
I don't think so at this point, because yes, prices have gone up at a time historically when they do go down, and they do go down at this time of the year for two reasons. Obviously, demand. We're out of the holiday driving season, but more to the point, we transition into winter grade gasoline, which is cheaper to manufacture. But again, with the storms, the 3 significant storms now in the Gulf of Mexico, the economics have been skewed, but certainly going into the holiday season, adjusted for inflation, where we have been, gasoline prices have rarely ever been as cheap as they are today. So no, I do not think this is going to have any sort of significant impact on consumer behavior.
All right, we'll be watching oil. You think it's range bound now for a little bit. Stephen, it's good to see you as always.
Absolutely.
Good to see you. Thanks, Stephen.
Maria.
Stephen Schork joining us there. Meanwhile, more trouble for the Equifax breach as your salary history may have been exposed. This is rival TransUnion hires lobbyists